Hello. Before we begin, if you want to be part of our community, please subscribe to our channel to access weekly, 5-minute episodes of this video series. We've created something different for short-term traders. Using an AI approach, we predict future turning points for the broader market, an actual date when the S&P 500 tape on a daily basis changes direction. What could this do to improve your setup and trading edge? Please note, this video is for training purposes only. Nothing in this video should be considered investment or trading advice. We found that traders can use these predicted turning points with other data and indicators to build better trading models and enhance your setup and trading edge. As this video series progresses, we would like your feedback. Each week, we will post a new episode of this video. It will present the predicted S&P 500 tape turning points for the upcoming week and present an analysis of how the tape was interpreted in context to last week's provided turning point dates. From time to time, we may also give an example of how these turning points could have been traded profitably. The calculated future turning points or trend changes in the S&P 500 tape are presented on a daily basis and have been found to be accurate 9 times out of 10, based on our experience with their use over the past 10 years. Coming away from the turning point, the new trend needs to be interpreted in real time, intraday. The predicted turning point does not indicate the direction of the possible new trend. Not all of the turning points are tradable, at least not profitably. A trend change prediction is given as an actual date. The trend change can occur on the day of, or the day before, or day after a predicted turning point. Consider it like identifying the market tempo. Our experience is that, barring an unforeseen catalyst, market momentum is generally higher around these turning points, which can magnify market moves for short-term traders. There are generally 3 scenarios. A rising daily trend into the turning point, which can resolve into a new consolidation, or a falling trend coming away from the turning point. A consolidative daily trend into the turning point, which can resolve into a breakout rising trend or breakout falling trend coming away from the turning point. And finally, a falling daily trend into a turning point can resolve into a consolidation or rising trend coming away from the turning point. Some notes of caution. We have found it important to correctly identify the emerging new trend coming away from the turning point before committing to a market entry based on your trading setup and edge. It is our experience that consolidations are generally difficult trading conditions to generate profits due to their chaotic and random nature and best avoided. This is the interpretation for the 2023 trading week ending January 20th. Last week, we predicted that there would be one potential upcoming turning point that could influence the SPX tape behavior this week. The predicted turning point was for Wednesday, January 18th, as noted in last week's video. Remember, the market can turn on the day before the predicted turning point, on the day of, or the day after. This is the S&P 500 Index, or SPX, for the week ending January 20th, each candlestick representing one day. On last week's video, episode 1.2, we had a consolidative trend coming away from last week's predicted turning point into this week's turning point on Wednesday the 18th. While consolidative in nature, it had strong bullish undertones. On Wednesday, the predicted turning point, we had a breakout to the downside of the bullish consolidative support line as shown. Based on our own trading edge, we found an early technical entry at 11:06 a.m., which was confirmed with momentum at 11:21 a.m. This turned out to be a great trade for short-term traders. Looking at the Wednesday SPX intraday tape, you can see where our entry points were and the size of the move. Looking at the SPX weekly 39.60 put, the potential trade had an approximate entry price of $130 and reached between $1,500 and $2,000 over the duration of the intraday move. That's between 1,000 and 1,500% ROI. Not a bad short-term trade. For next week, we have only predicted one potential turning point for the S&P 500 that could influence the tape's behavior in the broader market. Wednesday, January 25th. At this juncture, it is difficult to discern and too early to identify what the trend is into January 25th. It should be noted that the absence of further turning points this week does not preclude additional trading opportunities associated with a new trend or catalyst associated with earnings period or comments from the Federal Reserve. Good luck and stay safe, traders.